That the markets are still in a steep sell-off.
So let's talk to our Fox panel about it, see what's really going on. Fox business contributor Charles Payne. We have Gary Kaltbaum of GaryK.com, Victoria Barrett from Forbes, and Tobin Smith from Change Wave Research, along with Peter Schiff, author of Crash Proof. Peter, your beloved gold is down today, but so are the markets. What do you think's at work here?
Well, first of all, gold is up in terms of the stock market, so the Dow is losing more value than gold. And, gold's still in a bull market. Stocks are in a bear market. But, there's a lot of problems out there. Look, you got the terrible ISI non-manufacturing number that confirms, again, that we're in a recession. A lot of people are still clinging to the fantasy that we're not in a recession. And you've got a lot of warnings now coming out with the credit card issuers. I've been talking about that for months on this show. There is a huge crisis building in credit card debt. There are tremendous losses there. Credit card companies are really going to be tightening up on their lending standards, cutting back on people's lines of credit. And people are starting to realize what this means for an American consumer-based economy where people only spend if they can borrow.
Well, Charles, these numbers from the ISM are bad, but even the chairman of the ISM said you have to see how this trends out before anybody gets too excited. Well, obviously the market got pretty excited, but even the head of the institute that comes out with these numbers is saying, hey, folks, caution.
Caution. Also, you know what? If you I looked at the report, and one of the things that kind of struck me is, and with some of the respondents, it seems like they're reacting to the possibility of a recession, so therefore they've constricted their activity. In other words, if we're not in a recession, they're bracing for it, and sometimes if everyone does brace for it, it makes it a self-fulfilling prophecy. And so to Peter's point, we've seen the credit cards, we saw a downgrade of the credit card issuers yesterday, but you look at MasterCard, that stock has been performing exceedingly well in this environment. The other guys have increased their loan losses, but not to the catastrophic point that you would see reflected in the stock market right now.
Tobin, if what Charles says is correct and that it is a bit psychological versus with the real data behind it, do you then suspect that if we were to dip into recession, it would be a very short one?
Well, Liz, if you look at sort of compare 2001 where we are now, what's intriguing is 2001, we had the business spending, drop off a cliff. Consumer spending stayed pretty strong. And really, obviously, housing became the torchbearer, if you will, of spending. Now we're in a completely different place. We have business spending sort of hanging, flat, maybe a little bit up. We have consumer spending coming down. Part of what, the whole point on credit cards is, yes, we are having a constriction, a tightening. We came out today, they interviewed 300 different savings and loans and banks and said, have you tightened your credit restrictions? Almost to a T they have. So that tightening down changes. Obviously, the housing market's down. So the real savior here would be is if the consumer will pull back, but not too much. That gives us what we're forecasting, which is a negative Q1, a negative Q2, and then obviously the Fed is going to be at probably 2.5% interbank rates in the next 30 to 45 days. That's going to really be the floor of the market.
Yeah. Well, Gary, does it concern? We just heard from Sandra that there's 100% certainty now, at least by one group of folks, that there's going to be another 50 basis point drop by the Fed in the Fed funds rate. Does it concern you that it would be 2.25 points down within 2 months? That's a huge drop. Is there any concern there?
Well, look, as you know, I've been telling you that they were going to be very aggressive. I predicted it in intra-meeting. I believe they are going to go down to 2%. This is a Fed that has dropped all pretense. They care about inflation. They're looking at the economy. And let me just say this. I would like to put a positive spin on it, but that ISM number was really bad. We are going to have a negative growth number in the first quarter, probably in the second quarter. Whether or not it gets really bad or not, I think the market will tell us. If the market goes and breaks the lows we just saw about 11 days ago, that's going to tell you the recession is going to be a little nastier than expected. Now, let me say one other thing. My company's research, we go out and we are touchy-feely and we speak to all kinds of businesses. Business is not very good at the retail level right now. The consumer is definitely pulled back. When I speak to the companies that sell appliances, very bad. We already know about housing, so we are definitely in a downtrend right now. And when we come out, beats the heck out of me. But the Fed is doing everything they can. Not sure it's going to work.
We're all going to die. We're all going to die. Victoria, wait a minute. I want Victoria's opinion on no, Victoria. Never mind.
No, the Fed's going to make it worse.
The Fed's going to make it worse,
They're
Peter. But you look at what's happening right now, and there are a lot of people who say a couple of pieces of weak data. Here come the stimulus. What do you think that might do?
Well, look, the stimulus is going to make it worse. All they're going to do is run bigger budget deficits. We're going to borrow more money to send it out to Americans and hope they irresponsibly spend it with all the money they've already irresponsibly spent. I mean, we cannot get out of this mess by doing more of what got us into it. Unfortunately, we got to tough out a recession. It's going to be a doozy, but we've got to stop all this spending. We've got to stop all this borrowing. We've got to start producing and exporting and saving.
Peter,
go ahead, Gary.
You contradict yourself. First, you say the economy's going into the crapper.
It is.
But don't lower rates. You say let's raise rates, which makes absolutely no sense.
No, it does make sense.
I would agree with you on the inflation front, but the Fed is in a box right now. They have to make a decision, and they got to weigh inflation versus economy, and the economy's got some problems here.
There is no trade-off between growth and inflation. Real economic growth causes prices to fall. What makes prices go up is artificially low interest rates and excess money printing. That's what the Fed is doing. Yes, the Fed needs to be raising interest rates, and yes, we're going to have one hell of a recession. But there's nothing we can do about it.
Before we get entirely negative on this, I just want to point out one thing that was also in this very same ISM report. They asked respondents how they felt about the next 12 months. In response, 42% said it would be worse, 42% said the same, and 16% said better. Now, Toby, that means 58% of the respondents said sometime within the next 12 months things are going to get better.
Well, listen, another perspective on this, but this happens to be a fact. In 01, Greenspan waited to cut rates till 03. I mean, they were way, way behind the curve here. Here we had the Fed cutting rates 4 months before we got to a negative rate. So they are probably 2 years ahead of where we were in 01. And that's why, irrespective of Mr. Schiff's idea of whether we should be cutting or lowering, they're going to be cutting. And those low rates will be coming at the same time. We're in a refinancing mode. So you can make a strong case that they were there early and they were there strong and that they will put a floor under the market around the 11,500.
We're going to wrap this discussion for just a moment. Okay, now we're down just 258 points.
A little recovery.
It was worse. Many investors more interested in Yahoo's future plans than their current earnings.
Now, Microsoft wants to buy the web portal, while Google is hoping to team up with Yahoo. And now there is word Microsoft is going to kind of cozy up to regulators in an effort to win out the same federal officials the software firm has been battling for years. Our Fox panel is back now to talk about it. So, Toby, do we take this newfound love for regulators by Microsoft seriously?
No, but I mean, look at it. What else can they do? This is a company that has been vilified by the regulators, been vilified by the European groups, and they are finally sort of coming back whimpering, sort of. Now listen, please, we got this big company, Google, that's been eating our lunch. We're not that bad. Please, we're not that bad. And in the back, you know, their fingers are like this behind the back of their neck. You know, they really need to go through a regulatory process here where they're not the bad guy. This is like the beginning shot, but they've got to soften their position with these regulators or they're not going to get the Yahoo deal done.
Okay, Charles, what do you think? I mean, this certainly makes things so much fun to watch, doesn't it?
It really does, and I don't even think the U.S. regulators are going to be the problem. It's the European regulators. They really hate Microsoft, particularly when Mario Monti was in charge over there. Even though he's gone, it's still, there's so much animosity and just, you know, it's just hard to fathom. And you know, the irony, of course, is that Microsoft, Microsoft rather, went to the regulators about the Google DoubleClick deal, you know, trying to slow down a little bit. So a lot of this is politics, trying to gum up the works on both sides. I think at the end of the day, though, the deal is going to go through.
Peter, Milton Friedman used to say that corporations love the free market as long as it applies to somebody else and not to them. Is this just an example of that?
Well, you know, these antitrust legislation, you know, they've done so much more harm than good with this. I mean, I'm not worried about monopolies. I think the government ought to stay out of this. I think the free market gives us much better protection. You know, and it's unfortunate that, you know, the government was involved with Microsoft before, and now they're, you know, involved here. They should just stay out of it. They should let the market work. You know, from an investment point of view, though, I think all three of these stocks, you know, Microsoft, Yahoo, and Google should all be sold because there are going to be a lot of problems. I think stocks like Google have been priced to perfection. Obviously, Microsoft is going to up the ante and try to battle them. This is not going to be good for these companies' earnings in the short run. These stocks are going down.
Gary Kaltbaum, I see you sort of grimacing a bit there. What do you think?
Oh, I just don't know about this. They should sell themselves. I mean, they're a business and they make a lot of money.
You should sell stocks, right, Peter?
If you own, if you're a shareholder, if you own these stocks, you know it's going to be a bumpy ride.
Okay, look, as far as Microsoft goes, there's a credo in corporate America: when you need the regulators, kiss tookus, and that's what's going on here right now. I think Microsoft is going to do exactly what they need to do. They're going to get their attorneys. They're going to meet with the regulators in Europe and in America to try and get this deal done. But I got to tell you, at the end of the day, I don't think Yahoo wants this. I think Google is the interloper in this, is going to do everything possible to make sure it doesn't get done. And I don't think you're ever going to see a Microsoft-Yahoo deal. The other main factor is the cultures are totally opposite. They are so different from each other. I think it's a far shot before this one gets done.
Yeah, but Toby, how can they stop it unless they come out with a better share offer?
I'm still going on the kiss the tookus.
Yeah, I knew you'd get stuck on that one. Move on, Toby. Move on.
I'm a funny guy.
Well, you know, Gary makes a great point about the cultures. You know, I've been at both companies. I've known, you know, executives on both sides. Oh my gosh, you could not have a more different sort of approach to just how we do business and how we approach marketplaces. You know, if they don't get it done, and the point is, the Europeans will get over themselves because they have other fish to fry with SAP and other things they'd like to see happen. So I think Europeans will take care of themselves. But the real issue here is if we were to stop this, if there was to be a U.S. blockage on this, then I think it brings the market down even more because that takes out some of the other big deals that are out there. They've been talking about this deal for 9 months, maybe 12 months. If I had a nickel for every time I heard this, you know, thing was coming, you know, I wouldn't be doing this show.
But Charles, you know, Warren Buffett is famous for saying that all of the exciting synergies that two behemoths often see when they merge rarely come to fruition.
Yeah, you know, Microsoft talks about the synergies almost as an afterthought. They say, yeah, we'll save $1 billion. The reality is, if you can't grow the top line with the merged companies, then don't do the deal. But to Gary K's point, you know what, cultures aside, I think Yahoo has to do this. Yeah, you know what, Tobin, everyone saw this deal coming, yet the stock was up 60%. No one was long it before it happened because Yahoo was sinking like a rock. And if the guys at Yahoo think they can handle this on their own without any help, they're crazy. The stock was near a 4-year low. They were laying off people. They need this.
Last word to Charles. Well, some major media...
How much nerve do the airlines have? Or are they smart to be trying to squeeze revenue out of every single customer? Well, the latest numbers show they were late more than 25% of the time last year, and yet some of them want to charge you more, squeezing pennies out of you.
By the way, it's the second worst on-time rating ever. United says it's going to charge you $50 round trip to check in a second bag, $200 for a third bag. How do they justify this? Terry Tripler, founder and CEO of TerryTriplerTravel.com, is here now to talk about it. Terry, good to see you. Now,
good to be with you.
When we look at the price of oil, of course, it's down today, but gas prices have gone up, jet fuel has gone up. This must be the reason why, no?
Absolutely. It's a cost of doing business, and the jet fuel is absolutely killing the airlines. They're doing whatever every penny of revenue they can find, they're going after it.
Short of raising the prices for a ticket, right?
Absolutely. Other than raising the price, they're looking for every way that they can tap in and get an extra nickel, and they need it, and they're going for it.
Terry, what's wrong with that? I mean, we seem to be a little outraged, but isn't that just smart business to try and figure out ways to get more revenue, get more money out of people?
You know, absolutely. I look at it sort of as business 101. You know, this is the only industry where somebody paying $1,200 and somebody paying $200 receive the same number of amenities or the amount of amenities or service. Now, the person paying $1,200 is probably on a refundable ticket. They get 2 bags. The person paying $200, probably a non-refundable ticket. They pay for the second bag. Really, that's how business operates.
And I guess if you can charge for food, you can charge for a bag, right?
Absolutely, and I think that, you know, I think by the time we wish each other happy holidays, everybody's going to be in the same boat charging for that second bag.
Well, wait a minute. I don't know if that's a fair comparison because, you know, people can bring their own food, but now we're being told you can't bring on that second bag. And, oh, by the way, I want people to know that car seats and strollers do not count as a second bag. So at least they're not slamming new beleaguered parents, right?
Absolutely. And you know where the problem is going to lie now is on the carry-on. How many people are going to try to carry on bigger bags now?
Yes.
And then what we're going to have happening is when we get to when the people get to the departure gate, and now they're told that's too large to carry on, are they now going to charge that person $25? There's a lot of logistics here that have to be worked out before this thing can really operate smoothly.
Now, Terry, can't you strap it on top? No, I'm just kidding. I'm just kidding. But there were some solutions, or I put in quote marks, solutions, and one being to enlarge those containers on top of the seats that we're in. Is that out the window, so to speak, right now?
Well, it could possibly help, but boy, I tell you that they're really carrying on everything but the kitchen sink now, and so this will just make it more difficult. Now, United claims that 1 out of 4 check 2 bags, so that means 3/4 of the people don't. Therefore, if it does cut down on the bags, everybody's going to benefit. They're going to be loading bags faster, unloading them faster. That's going to help, but I am concerned about the carry-on.
Stay with us, Terry. We're going to bring in our panel because some of them are very hot and bothered about this. Gary K., is this yet another way that the airlines are making people feel so awful when they travel, or is this smart business?
I think it's silly business, and I actually think they're imbeciles. You know, part of corporate America is public relations, and I think they've already had bad public relations. Let's just add more fuel to the fire. Look, I understand oil prices are very high, and it hurts, and I understand that baggage carries weight, which uses more gas, but there should have been a different way to do this. If it were me, I sit down with the airlines and say, charge an extra $1 to a ticket. This is too loud and too noisy, and it's going to make all the passengers upset. Unfortunately, the rest of the airlines are going to now follow as they always do.
Well, Toby, it won't make all the passengers upset, just those with a couple of extra bags.
Well, look, I just flew back from the Super Bowl on Monday, and the amount of baggage that the passengers brought into the plane was unbelievable.
Oh, yeah. So true.
They have to come up with a better system than basically every airline does it different. But forget about this. If you're going to raise the prices, then you got to guarantee me that I don't have to wait an hour to get my baggage like I did yesterday at U.S. Air. Can I say U.S. Air? U.S. Air. An hour, because after August 15th of 2 years ago, where we had the 7 planes theoretically loaded with bombs, etc. Everybody checks on more stuff because you can't carry on your various tubes and stuff, and that goes into your check-on bags. So at the same time that we're putting more stuff to check on, they never added more people. They never added new RFID technology so they could avoid all the problems they have. All they want to do is raise the prices and not improve the technology, and I say forget it.
Well, Toby, why do you have to bring your rocket launchers with you? I don't understand. Just leave them at home.
Well, yeah, I mean, what happened was we've changed the rules. If you ask anybody in the luggage carry, because I was there for an hour, so I got to talk to everybody, they said that checked-on luggage now is about 20% higher today after August 15th of 2 years ago.
Yeah, and people, maybe the message is stop schlepping. I mean, Charles, you look at what he's talking about, where everybody stuffs their luggage in above, and then the last group of people get on the plane, everything's taken off. And besides, I mean, the airlines don't want to go under. The problem is they're the only game in town to fly people around. So there's some sort of belief on behalf of the average person out there that you owe us this service.
Well, there definitely has to be a happy medium. I think to Gary K's point, $25 is too much. To Tobin's point, obviously we do need to cut this back. I know when I spend extra money for a business or first class seat, I hate to see people taking my space, because they don't deserve it. But let me tell you what I'm really worried about, the trend, the direction they're going in, because soon they're going to start charging for weight, and I'm going to be paying more than everybody on the set. So I'm a little worried about that.
Peter Schiff, go ahead, weigh in on this.
Well, there's two key points here. One is the government loves it when they put the price increases through extra fees for baggage, because it doesn't make it into the CPI. When they talk about airline fares. So if they
it's a conspiracy.
But also, going forward, look, the airline industry is going to go through a major consolidation over the next 5 years. You're going to see a lot of mergers, some bankruptcies. There's going to be far fewer planes flying, far fewer Americans in those planes, and ticket prices are going to go way up. There's no way around that.
Everybody's going bankrupt.
No, but we're going to have a much lower standard of living in this country. Americans are not going to be flying as much, and it's going to cost them a lot more when they want to do it. There's no way around that.
The problem for the airlines here is they just changed the norm. People's expectations were that when you go on and you have a couple of bags, you're not going to be charged. Now you're going to be charged. There is going to be a backlash here for changing the norm and not getting any extra value whatsoever.
These airlines aren't making any money, and they've got to make money. They're not going to do that unless they get a lot leaner.
Okay, wait, hold on.
If service was better, they would make money, Peter. There's no one has sympathy for the airlines because the service is abysmal and they do mistreat the passengers.
It's lousy. I mean, I think American air service is the worst in the world. I mean, if you fly coach in Asia, you get a better meal than first class in the United States. And sometimes I flown first class.
Wait, gang. I flew on Russian airline once. It was, I kid you not, it was standing only. Standing only. They had overbooked and they actually had things that you had to hold on to. So it could be worse, Peter.
I don't know. I took a commuter flight in Thailand. I took a commuter flight in Thailand for 1 hour.
Stop for a second. Terry Triple, you've been listening to everybody bloviate about all of this. Have you learned anything from the way people feel? I mean, there's a lot of passion here.
Well, there really is. A lot of people are very upset about it. And, you know, I look at it this way. 40 years ago when I got in the business compared to today. Today an airline's trying to convince you to fly that airline. 40 years ago we were trying to convince people to fly. The airlines went overboard and tried to get people, get passengers and whatever. And now as they start to cut back, it really hurts. What the airlines have never learned to do is sell up. They're the only industry I've ever seen that won't sell up.
Terry Tripler, we got to leave it because
you.
we just want to alert the viewers to what's happening in the market.
Business world. So as the stimulus package moves through Congress, lawmakers are now trying to load it up with more spending.
Including money for things that aren't necessarily stimulus involved, like home heating assistance and additional unemployment benefits.
Has the legislation become a stealth bill for new entitlements? Our Fox panel back now to discuss it. Gary K., home heating is now getting involved in this. I mean, listen, nobody's against warming up people who are cold, but now this is part of the stimulus package. How does that stimulate?
Well, I also need a driver for my golf bag and a box of Twinkies. Look, I've been saying all along, I really think this is nonsense. It's going to add maybe a half a point, maybe 1% to GDP in a quarter going forward. It is going to do nothing to help the economy and change the behavior of consumers. You have to let us go through whatever this downturn. It's going to take time. And I got to tell you this, it's almost like we are in an entitlement state. It's like the nanny state, give, give, give. And I only have one question. What do you tell the couple that made $150,001 last year? Oh, you made too much. You're not getting any of this. It just makes no sense, and I just don't like anything about it.
Or Toby, what do you tell the veteran who's come back from Afghanistan, and suddenly one congressman or senator proposes putting veterans benefit in the bill, and you tell the veteran, gee, I'm sorry, this is a stimulus package, you can't have it.
Well, I mean, it's a very difficult point to make here, but, you know, you got to separate what we should do or not do for our veterans from economic stimulus.
But they're not doing it. That's the point. In Washington, they're combining it all together.
Well, I understand it, which mutes your whole issue of, is this a stealth appropriations bill? Of course it's an appropriations bill. You know, of course they've tried to meddle with this thing. And, you know, what scares me is that we really have started to say that we can solve all our economic problems by either A, dropping, you know, Visa cards from the sky, or B, having the Fed, you know, make this market completely dependent on whether I bet the Fed goes to 2.5% or 2%.
Well,
we got to look at the fundamentals right now, and right now the fundamentals aren't strong. Let the market come back the way it should. We'll be fine. We got to get over ourselves on this.
Well, can I just say something though? I mean, totally contradictory to what Tobin's saying, Charles. But I mean, he talks about dropping Visa cards or debit cards from the sky, but the market's rallied 6.5% in the last 10 days of January, ostensibly on the idea of this stimulus package helping retailers and some of the other big things.
Well, I think it was more so the Fed, that perhaps the Fed got back in front of the curve. In this regard, I do kind of agree with Peter that Americans have a soft underbelly when it comes to taking pain, and, you know, we have to sort of sometimes go through recessions. I don't think it has to be a deep recession, but the real problem here is you've already promised this money to people. You know, when I promised my son money for his allowance, he reminds me of that. You know, I don't care if it's a nickel or a dollar. Now, right now, what we've got going on is a legislative version of dueling banjos, and hopefully, you know what, it won't end up being a disaster because people are already spending the money.
Peter, that's the point, is that it's an election year and the politicians are throwing everything in this. It's very difficult to pull these entitlements as they become out of a so-called stimulus bill.
Well, you hit the nail on the head. This is not stimulus. This is let's sacrifice the country so we can reelect the incumbents. I mean, it's, throwing gasoline on the fire. If you understand our problems, our underlying problems are the result of too much borrowing and too much spending. And this stimulus package is about the government borrowing a bunch of money, writing checks to people, and hoping they take it to a department store and blow the money. This is going to create a deeper problem. Unfortunately, it's not going to stop the recession. We're probably going to have another stimulus package closer to the election when this one doesn't work, and it's going to be a disaster.
Gary Kaltbaum, the market's down now 328 points. Are you worried right now, or are you thinking this is just one bad day?
Well, look, we topped out months ago. It just seems like we're just in a bear market for stocks, and the rally we just had was because we dropped about 2,600 Dow points. The market, for me, is really speaking loud and clear about the economy, and now we're starting to see the numbers come in. And once again, there is no way to paint over or gloss over that ISM number, the jobs number, which is going the wrong way also right now.
All right. Well, as Gary said it, the economy is the story. A major concern as voters go to the polls today. All right. Well, if you're going to Disney World, you need a credit card. And credit cards, the next sector of the financial industry to get crunched.
Some companies are now being very picky about just whom they give cards to. But seriously, how long will that last? Is this just a few months in the making, and then they'll end it and start getting very liberal about it?
Is Toby asleep? Oh, there he is.
He's talking to his computer rooster. Our Fox panel back now to talk about it. All right, we'll keep you awake, Toby. What do you think about this credit card story? Front page of the New York Times, people aren't charging anymore, credit cards aren't lending. Do you think that this will last a long time?
Yeah, we've been talking about it for the last month and a half or so. In we call the Super Spender survey group that we follow very closely. In the last part of December, first part of January, we saw a very steep reduction in both intent to buy, meaning that how much they were going to spend, and also their savings rate coming up. When you couple that with the fact that you have a lot of the credit card people that have had foreclosures and et cetera, so their credit's already ruined. Why the hell are you paying your credit card if you're going through a house foreclosure or a credit line foreclosure? Your credit's ruined anyway, and you're seeing some of those people pull back, particularly in California and Florida. The trend that we've been following is that we should see a record year this year for credit card default. If we have that as we forecast it's going to be, you're going to have more failures. And by the way, Charlie, MasterCard, the company, doesn't have any credit exposure. They're just the issuer, so they don't have credit exposure. That's why that stock's done so well.
It has done very well. Also, it's done well because of the Asians and other foreigners. And
sure.
What's interesting, and maybe I'm getting off track here a little bit, but it's in people's nature to spend money that they don't have. And it's not just a U.S. phenomenon, Peter Schiff. It's all over the world, which is one of the reasons MasterCard's earnings have done so well. But there's no doubt that people are retrenching. There's absolutely no doubt people are retrenching. Even people who have a job, who aren't losing their homes because they're afraid that every time they turn on the news, that's all they hear about is doom and gloom.
Peter actually has some personal evidence that the credit cards are clamping down on lending, right?
Yeah, I'll give you my own story from last week. Remember, there is a subprime type crisis brewing in securitized credit card bonds. But last week, I have an Amex card that I use for my employees. And last week, American Express, without notifying me, reduced my limit by 85%. And we went to make a charge, and it got declined. And basically,
do you always pay off? Do you always pay off?
I have no balance on my card. I have paid it in full. Every month for over 5 years, I have an unblemished credit in my business and personally. I don't have any debt.
What did they say?
Oh, yeah. I mean, I don't have any debt. I have no mortgage. I have no car loans. They basically said that because I was in an industry that was high risk, they were reducing my credit line to limit their exposure. So they're starting to factor in.
They also found out you were short the stock, too.
But the problem is, a lot of Americans, even those that are paying their credit cards on time, they think they have their credit card in case, they lose their job, they don't have any savings. People think they're going to be able to rely on their credit cards. They're not. People are going to have their limits reduced.
Does Peter pay on time, but he pays in solid gold.
Gold, right?
Go figure.
He actually sends the physical gold bar in the mail.
You guys are missing the significance of what's going on. I mean, when people are going to have their credit limits reduced significantly, they can't use their charge cards anymore. People are going to find that they don't have that lifeline.
Toby, you were agreeing. Have you heard of this anecdotal evidence? The financial companies are having trouble getting their limits to stay?
Well, we're surveying. We surveyed a group of people last week in our group, about 11,000 people, and asked, are you getting credit card reduction? Are you getting tighter numbers? And again, this is the higher end, over $100,000 household. And as a general rule, the answer is no. But the specific issue is that taking sort of the business risk and the other parts of it, where you're seeing a clampdown is on new credit and credit extension. People get every year don't realize that they get their account reviewed. And if you have, have multiple credit cards going at the same time and have multiple balances, then they change the way they rate you, and you will get contraction in credit cards.
I only have 3 credit cards. I only have 3 credit cards.
All I know is since January of 2005, I have tallied the number of applications I've received in the mail, 746, including my 2 kids. I'm still waiting for my fish to get an application in the mail from these people. I think that they're not going to walk the walk. They may be talking that they're going to lower the applications.
It's going to stop.
They live off the fees. They live off the interest, and I think they're not going to slow things down going forward.
There is a credit crunch going on right now, and a lot of it is well-deserved. I mean, and certainly in terms of the mortgages, you don't want people who can't afford to pay off mortgages getting mortgages. The same is true with credit cards.
Well, the same is true.
Some of it is rationality.
By the same token, though, this is some business models, though. If you're Capital One, it is your business model to keep sending these out. And I'm sure that 700 some out that Gary K got probably came from Capital One.
But
so
the bottom line,
people, you can't just change your business model overnight and say we're a credit card company, but we're not going to extend credit cards.
The bottom line is the people who have been supplying all the credit, who have been buying all these securitized bonds, are going to get burned. Americans simply can't pay back the trillions that we've borrowed on these credit cards. We don't have the income. We don't have the money. And the assets aren't there. And so once the people who have been lending the money realize that this is a bad business, they're not going to want the exposure anymore. They're going to cut back.
Toby, go ahead.
Peter. Look at the credit card industry is built on a default rate number. The reason why they have an 18%.
Yeah, but it's going to go up, way up.
Thank you,
the default
Peter.
rate's going to go way up.
My turn. Take a breath. The bigger issue here is that their business is built to have delinquencies. That's how the credit card industry works. They rate credit all the time. The same argument, Peter, you're using today, you could have made 5 years ago, 10 years ago, 15 years ago. I believe me, I've heard you do it for 15 years. Okay?
No, you haven't heard me do it for 15 years.
The issue is, let me finish, Peter.
This is the same issue that I made with subprime, and you guys laughed it off. You couldn't see the subprime crisis coming when it was right in front of your face.
It's a completely different business.
Yeah, but no, you were saying the exact same thing. You were laughing at me when I predicted the subprime. You can't see this.
It is down 320.
Stay tuned. Much more ahead. Moments to go until the close, 6 minutes away, and the Dow is losing air very quickly, down about 353 points at the moment. A lot of troubles with the bond insurers, not to mention the financials. Tough day on Wall Street.
A lot of downgrading going on, and suspicion that more will come as a lot of different financials are finding out that their financial records are not as well kept as they thought. Sallie Mae, of course, they're the ones that back up a lot of those student loans. They have been downgraded by S&P to just one step above junk bond status. Their stock, it's getting hit like most stock. It's down about 4.8, about 5% today. Most of the stocks are down today on a day when the stock's been hit all across the board. But again, these downgrades of financial institutions are hurting the market bad.
Yeah, Fitch may cut a CIFG's AAA insurer financial strength rating. Of course, AMBAC and MBIA have been really on the hot seat. And now Warren Buffett telling Fox Business, I'm not helping them. I've got my own bond assurance company that's going to do just fine in this atmosphere, which is a very tough one. So let's throw it out to our Fox panel as the Dow is down 357 points. Tobin, what is at work here?
Well, you know, it was we talked about since basically January. We're in a bear market, and you have to change your perspective. We talked about the idea that you sell into these real sharp V-shaped rallies, just like we had, you know, basically over the last 10 days. That's when you lighten up. You expect to come right to the top of the, technical support. When the fundamentals are cloudy, you got to go on the technicals. The technicals, right when we got to 12,800, boy, everything ran out of steam, and we've jumped right back. Again, you expect in a bear market to have sharp up rallies and sort of slow and low and low and lower until we get sold out. We're not near that yet. You know, it feels great to be in cash. We're going to be buying. The world's not coming to an end, but the world is certainly going to need to price in more problems in the financial world and in earnings than just we are now.
But, Charles, it's important to look at the numbers. Obviously, technicals are important, but specifics of what is happening with companies. What Liz found out today about a lot of these bond insurers and about how their status may be lowered. We just found out that Sallie Mae has lost a grading. One of its rating has gone down to just above junk bond status. This is Sallie Mae.
Right.
I mean, these specifics are hurting the market right now as well.
Well, they're definitely not helping. And, of course, one of the things that helped last week was the tough talk from AMBAC saying, you know what, we're going to keep our rating. And they seemed pretty confident last week. That stock made a miraculous rebound. You know, last Monday I recommended IndyMac. We sold it on Tuesday because the move, it was just outrageous. It went up 40% in 2 days. So, to Tobin's point, some people are trying to buy the bottoms and trade the market, but there's not a lot of money committed because there's so many unanswered questions out there.
Peter Schiff, gold, your favorite, is down about $17 today. But as you look at the overall market and try to explain to the average investor, the average viewer who might not really understand what's at work here, what to do in a time like this, aside from your usual buy gold, etc.
Well, I mean, you got to sell. The market's going lower, and
Do you
gold
sell
is down
into
half.
a fall like this, though?
Yeah, well, it's going to be lower. I mean, it would have been better to sell yesterday, but there's so many problems coming for this economy. Look, let me get back to this thing on these credit cards. People don't appreciate this, but the problem was subprime. The reason the thing blew up was because they assumed very low default rates, and as long as the defaults were low, everything was fine. The minute the defaults were higher than their computer model suggested, it blew up. That's how the credit card industry works. They assume a certain default rate. They are way low on that. Defaults are going to be much bigger than they imagine, and the whole industry is going to blow up. And the economy is a mess, and people have to understand that and understand that it's not just stocks going down. It's the dollar going down. It's up today, but it's going to go down a lot over time. And it's not just selling stocks. It's selling dollars. There is no safety in a money market account or a government bond. People need to look abroad. They need to buy gold. They need to buy foreign currencies. I like the Swiss franc. I like the Singapore dollar. You can buy foreign markets, but you got to get out.
Go ahead, Gary.
Peter, I think it's wrong of you on national TV to say that money markets are not safe as a generalization.
Because they're dollars.
Because, Pete, you're going to scare the living heck out of people here. Most money markets are. Let me finish, Peter. Most money markets are safe, but you should just tell individuals to check for themselves.
No, look, I'm talking about the safety of the purchasing power. Inflation is rising.
Peter, hold on.
Peter.
Gary has the floor.
Look, what we have going on here is a market that is now reacting to recessionary numbers, a move down. I just want to make sure every investor knows we've been through this before. Bear markets happen.
Like this one.
Economies. Oh, jeez. Dude, take a Valium for a change. Anyway, and we are going to get through this.
The power drink to
look, we're going to get through this. It's just got to run its course for a while. I have no idea what price or when, but I just want to finish up because I wasn't on yesterday. Eli Manning for president.
Oh my gosh!
I don't know what else to say. It's a great week for the call bombs.
Indeed, it was a superb game. But Charles, you mentioned that you made a call. A stock went up 40%, and then you sold it right away because you said this is really dramatic. What is behind you when you do these types of things as we get about 20 seconds away from the closing bell?
I base everything on fundamentals, and then when they get too ugly, sometimes we just kind of roll the dice, which we did last week. With that and home builders, worked out very well. But Tobin's point, we have been in a lot of cash recently. I'm excited about the market.
Well, you mentioned the word ugly, and that is what the market is.